last week we found out something pretty darn important about this particular moment in time. You know, we have two economies going. There's the smoking consumer economy, and then there's the hit-or-miss business economy. If you sell things to the enterprise, I've got to tell you, I think it is basically a crapshoot. If you sell things to individuals, chances are really good that you're thriving.
House of pleasure.
And within the consumer economy, there are a handful of companies that dominate all the rest. Companies with the scale. Remember how important I talked about last week? The ability to be so big. The scale to squeeze their suppliers and pass on terrific deals to you, the consumer. You know what I'm talking about. I'm talking about WATCH, my acronym for Walmart, Amazon, Target, Costco, and Home Depot. These five players all have fabulous fundamentals, but today I want to take a step back and evaluate them from the technical side. And that's why we're going off the charts to get a better reading on WATCH with the help of Bob Lang. He's the founder of ExplosiveOptions.net, as well as being really the brilliant technician, the all-star duo behind the Street.com's trifecta stock newsletter. He also wrote a book, and it's called Know Your Options. According to Lang, all five of these particular charts look like they're in great shape. But given that Amazon's reporting this Thursday, gun to the head, no thank you, and Home Depot's more specialized, let's focus on Walmart, Target, and Costco. These are the three quintessential big box chains. Now, with back-to-school season just kind of right around the corner, these three could have a lot to look forward to. Remember, WATCH is all about Amazon and the major retailers with the strength to resist Amazon and perhaps even beat Amazon at its own game. You know I love the fundamentals of these. I wouldn't have selected them otherwise. But Walmart, Target, and Costco have been red hot lately, and I don't blame anyone for worrying that maybe that they're too darn hot. We know what that means. It means that they're dicey and worrisome, and that's why we've got to consult the technicals to be sure that we're okay if we buy these stocks. Let's start with the daily chart of Walmart. This is the big daddy of brick-and-mortar retail. Lang points out that this stock's been snorting like a bull. Look at that chart. All year long. Last month, Walmart broke out to the upside on very strong fundamentals. Very strong volume. Look at this. Look at this. Chartist volume is a polygraph. This is just a huge spike in volume. When the volume is low, it means a move might be lying. When it's high, it means the action is telling the truth. You need all those shares trading to find out whether it's just a false move or real. And then there's the relative strength index, RSI. All right, now, this is one of my favorites. It's an important momentum indicator, but it's been in overbought territory, that's the green, for a month and a half here. Now, that ordinarily means the stock may have come up too far too fast. However, you get a new term here. You get an embedded, this is embedded, an embedded overbought situation where stock is so low that money managers just keep on buying it. And that's what Lang thinks we have when it comes to Walmart. I often describe stocks like Walmart as anointed winners. Wall Street blesses them, so big hedge funds and mutual funds keep buying and purchasing shares even as they continue to run. You want to know how to spot an anointed winner? Check out Walmart's Chaikin Money Flow, the CMF. That measures the level of buying or selling pressure in a given stock. It's a terrific way to figure out what the big money's doing. Now, Walmart's been in positive territory for quite some time here. Many institutions are buying this stock hand over fist. Now, normally you'd expect it to be down here a little. No, they just keep buying it on good days and bad. Now, the stock just dipped below its 10-day moving average, all right? Now, you maybe be worried about that. I mean, that has been acting as a kind of soft floor of support. But the last time that happened was in June. And afterwards, Walmart immediately rebounded and came roaring back. According to Lang, this stock has no real resistance above here. And given that it's already hit an all-time high of 115, he thinks it's smooth sailing to $130. That's a very big call. Next up, how about the daily chart of a stock of a company that I was visiting just 2 weeks ago? Target. This is the smallest company in the WATCH brotherhood. Target may not have the scale of a Walmart or a Costco or even, of course, Amazon. But what they do very well. And CEO Brian Cornell has done a fantastic job of scaling up this terrific retailer. He has really gotten his hands dirty. He goes to a lot of stores. He understands the small store format. He's got inner city. He's got college stores. He's got everything going for it. But what does the chart tell us? Okay, Lang has spotted a nice longer-term cup and handle formation. Wow. I got to tell you, that's where a stock makes a cup-shaped bottom right here and then trades sideways for a period of time, forming a handle, right? And then this is one of the most reliably bullish patterns in the book. And that's why with the stock basing at a higher level here, Lang thinks the stock is ready to resume its uptrend. I could not agree more. I would pull the trigger tomorrow. Right now, target's at 87. Once the stock manages to break out above $90, Lang expects it to really get things moving. And we could be looking at an imminent run to $100. Meanwhile, take a gander at the on-balance volume line down at the bottom. Okay? This is a momentum indicator that looks at volume flow, adding the volume on up days and subtracting the volume on down days. I used to do this by hand. I loved it. To predict changes in the stock's trajectory. When it's rising, Lang says it's very bullish. And look at this. Target's on-balance volume has been moving up steadily for the last 2 months. Even as the stock has plateaued in recent weeks, the on-balance volume keeps climbing. This is precisely what you want to see if you're going to predict the next big move. Then there's a technical tool we use less often. I've not talked about it on the show, but we're always trying to bring new things to you. It's the Ichimoku. I'm not kidding. Ichimoku Kinku Hayu, which is Japanese for one-glance chart, although it's usually translated as the Ichimoku cloud. It uses a number of moving averages to give you a clear read of the situation. But what you really need to know here is that when the Ichimoku cloud is green, it means bye-bye-bye. One last point on target. Look at the moving average convergence divergence indicator in the MACD. That's another momentum gauge that can detect changes in the stock's trajectory before they happen. Lang's always on the hunt for bullish MACD crossovers, where the black line goes above the red line. This is a little tougher here. This is one of the most reliably positive signals. Target looks like it's about to make a bullish crossover. That could ignite the stock, which is why it's Lang's favorite name in the group. I personally would love to see this already crossover. I think Lang doesn't want you to miss the opportunity. Finally, let's check out one of my absolute. Let's go to Costco, okay? This is Costco's daily chart. The stock has been sensational. Do you know that this stock has gained 38% year to date? Even better, 2 weeks ago, Costco broke out to the upside on high volume. Now, remember, whenever you're looking at this, volume's that lie detector. Hey, speaking of volume, the on-balance volume, okay? The on-balance volume, the cumulative measure of the volume, remember I told you this by hand, flowing shows an incredibly strong hand. Look at this. That's beautiful. Higher highs, higher lows. It just keeps climbing. To me, I thought this was too high and too aggressive, but you know what? Lang points out that the relative strength index off the charts is ridiculous, RSI, and it's good. Costco is very much in the overbought territory, but it's embedded overbought. That's why he's a little concerned that the stock, though, may be getting a little bit toppy here. He's not totally convinced that it's perfect for what I just said. Now, that said, the Ichimoku cloud is green and expanding, a very bullish sign. And if Costco gives you even a minor 1% pullback, Lang thinks it's a buy, and that's what I think is going to happen. You pull back to here, buyers will come in. So he and I end up agreeing. Put it all together, and he believes Costco's headed for $300. Not that much from here, although it might take a slight detour lower before resuming its run. The bottom line, you know I like Watch. I like Walmart, right? Amazon, Target, Costco, Home Depot. And I really like his thesis on Target and Costco. I'm not as enamored of Walmart. I think Target's the best of the three, just like he does. So the chart is interpreted by Bob Lang. It's just that all three, though, could have plenty of upside levels. What can I say? How about great minds think alike? Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.